Welcome to Fintech Uncut, the quiz show with candid commentary on the biggest fintech and financial services news of the week that was. And now, it's over to your quiz master.
Hello everyone, welcome at the very first episode of Fintech Uncut, the quiz show with candid commentary on the week's biggest fintech and financial services stories, with the wise guy Chris Skinner, the other guy Andrew Forster, and Judge Mary. The show is built around 6 questions, divided in 3 rounds. The biggest news, you have the most controversial news, and then the last one, the WTF round. And I will immediately kick off with the first question for Mr. Wise Guy and the other guy. We all know the saying that data is a new oil, right? With oil prices booming short term and becoming hopefully redundant in the long term because of sustainability, where do you think the Saudis put their profits this week to make sure that they can keep eating cake with icing on top of it? And before you can answer the question, you can get extra points if you guess the icing.
So I was just going to say that the Saudis, for those who haven't noticed, have just invested very heavily in Credit Suisse, which is interesting because they should have been investing in chocolate, and that chocolate is far more a viable product from Switzerland than banking. It tastes better. They could have invested in watches, to be honest, because that's also a major export of the Swiss community, watches and chocolate. But instead they, for some reason, invested in Credit Suisse.
I actually thought that that the most important investment was coming in the Line. You heard about the Line? It's this 170-kilometer long city in the Saudi Arabian desert that they've just started building, 200 meters wide, and it's going to have 9 million residents in it. Surely that's where they're sticking all their money at the moment. I mean, the guesstimates are it's going to cost anywhere between 200 billion and $1 trillion to build. But it's going to have, you're talking about data. The whole city is going to be run by AI. It's going to use renewable energy, and the residents are going to be paid for their data to be able to run. Surely that's where they're investing all their money at the moment. I mean, wouldn't you want to live in a futuristic world like that, Chris? I mean, you're a sci-fi nut. Surely that's right up your street.
Saudi market's interesting. I mean, they've invented this whole new city called Neom, which incorporates
that's the Line, Neom.
And this is a major development that is a huge gamble. But basically, when you have billions of dollars of income from oil, you can spend it wherever you want, and they're spending it on creating an alternative Dubai. Do we need another Dubai? We'll find out.
Do we need more chocolate?
Well,
we definitely
always need more chocolate.
So Mary's flashing her phone there, showing the time. You definitely need more watches, don't we?
We definitely need more watches, and we definitely need more chocolate. All right, my voting. Chris, I'm giving you 10 points, partly for the chocolate, partly for the seriousness of it all. And Andrew, you get 8.
God.
And let's dig down a little bit into the real story here. So, Rik, what was this about?
It was indeed about the investments that Saudis are making into Credit Suisse, and they see the cake as the financial and commercial investments that they made, and the icing on the cake is to the so-called knowledge trust osmosis in getting some of their top people investing or putting their knowledge also in the Saudi economy.
I must admit, it really, really surprised me. I mean, there's been rumors of Credit Suisse being on the the brink of collapse for months now. They've been hit by a huge number of scandals, data loss, linked to money laundering for a drug cartel. They've had this whole story about asking their staff to destroy documents when the sanctions were brought against Russia, and yet still the Saudis thought that it was a good investment. To me, that was a big story and a big surprise. I mean, Chris,
well,
did you
they probably got a better deal out of it than without the cartel and Russian and all the other scandals that were linked to Credit Suisse today. But we're going to go to the next question. Next question, and there's the last one of the biggest news, made me think of the year that I met two of my favorite fintech people in Singapore. Back then, at Money 2020, the star of the show was Tony Fernandez, founder of AirAsia and BigPay. BigPay made the news again this week. Can you guess why that was?
That was because the founder is getting out of financial services altogether and just going to be selling t-shirts, merchandise, because when we saw him on stage, that was his thing, is that he was the only banker there that was dressed in a t-shirt, really, really casually. I really loved the guy on stage when I saw him there. So surely he must be getting out of banking altogether and starting up his own BigPay merchandise t-shirt line. That's got to be it.
I thought he was getting out of BigPay to go to Little Pay. Let's go and do micropayments. Let's go and do small stuff, and deal in Shibu Inu or whatever. Let's go and deal
Doji
with
coins,
alternative currencies that people really want, like Dogecoin or Dogecoin or whatever it is.
Well, it is getting closer to the real answer, in fact.
Oh, well, if it's got to do with cryptocurrency, surely the biggest news is that Chris has lost another €1 million in crypto.
Well, that has nothing to do with BigPay, of course.
It's no longer a big pay. That's the thing.
That's why it's Little Pay. Come on, we don't want Big Pay. We want Little Pay. We want small stuff. I want to deal with buying access to a banking scene news article for 0.01 euros.
Do you think it's worth that much? Jeez, we're going to have to work out a new valuation then on the banking scene.
All right, gentlemen, time to get serious. Final answers.
So I'm assuming that the big story has got to do with BigPay accepting Bitcoin and Ether as top-ups now for their wallets. Is that the story you're referring to, Rik?
Sorry, what are those things, Andrew? I've never heard of those.
They the ones.
Explain us Bitcoin, Andrew.
Does anyone use it in real life?
Potentially, they were the things that you should have invested in instead of the ones that you did invest in, Chris, and maybe you wouldn't have lost your first and second million on the cryptocurrency.
I put all my money into Jesus coin because hallelujah, now that's where I'm going.
All right.
So what was a big story about that?
Well, it was exactly about customers of BigPay being able to top up crypto without any hidden fees. And actually, there was no sign of Tony Fernandez anymore in BigPay. I don't know what happened to him, but that was not part of the story. There was nothing in it on Little Pay either, although top-ups can probably be smaller amounts as well, given the geographical location where BigPay is most active.
And Revolut broke a similar story this week as well about cryptocurrency being able to use seamless conversions in their payments. So you can pay at point of sale with fiat currency, and they'll do automatic conversions at the back end. So as much as I'm a huge crypto skeptic and have been for a long time, this is maybe at last coming
You
one
can't
step
be a
closer
skeptic
to
any longer, Andrew. I mean,
being a
Visa is
currency.
now taking crypto. So, you know, when you see, and MasterCard's investing in crypto, when you see those companies doing that, then you have to say, this is now mainstream reality. It's not a fiction.
I'm
Yeah,
gonna have to cut you two guys
Yeah.
and give
I got-
Mary the word.
I got the points. All right. Andrew, you're winning this round because you're great at the diss and great at the delivery. So you get 12. But Chris, you're just right under it, 11.5.
That is good.
I'm the wise guy.
And I may have good news for you because I can imagine that you are better in the controversial round than Andrew is, but we'll see about that. First question of the controversial round. We all know that Brexit has been pretty controversial over the past few years. And I don't want to go too much into politics because this is a fun quiz, but I do want to share with you what disturbs me personally the most out of Brexit. And that's the queues, the enormous queues in King's Cross every time I have to go back home by train from London to Brussels and the delays that come with it. Now, my question is, what else has officially been delayed this week? And one moment, I'm going to give you one more tip because it is very cryptic. It's not the deadline that the ECB set for banks this week to deal with climate risk.
Who goes
got
first?
you on the buzzer that time, Chris.
You.
It's definitely
I could say something very nasty now, but I'll not.
Leave that for after the show, please.
Father Christmas has been delayed because of Brexit border controls. All the parents are going to have to tell their children that Father Christmas is delayed this year. And I can definitely confirm that as fact because every single damn parcel that I order from Europe now takes 3 months longer than it used to before Brexit. So unfortunately, Father Christmas is only going to come at Easter time next year.
Andrew, I'm going to tell you something new here. This is a fintech show.
So you asked what the big news was. That, you know, you have to pay for things. If
we're talking delays, I'd say it's the delay around banks doing digital transformation, which I call Bankenstein, as you can tell from my t-shirt. So Bankenstein is the time it takes for a bank to actually do digital transformation. Most have not done it, and it's been delayed for 100 years. So, you know, that must be the biggest delay in the history of mankind.
Mary, shall we give Andrew another try?
Well, he's still up Santa Claus. I mean, come on. What about Jack-o'-lantern and Halloween? Has that been? No, that wasn't delayed. We did a good one this year.
Yeah, no, nothing was delayed on that side because no gifts are involved. This was to do with cross-border ordering and all that kind of a thing. Well, I would say it's probably related to something to do with regulation, because having worked in financial services for a very long time, I know that nobody does anything that they don't have to or be forced to until the very last minute. So unless it's going to be massive fines that are going to be thrown at them or anything like that, nobody actually, well, very few people will get on the front foot and do things proactively. So it's probably to do with the ISO 222 regulation and SWIFT. Am I right there?
It's now ISO 20023 because it's moved to the next year. And considering this was, loitering from 2004, we've had over 20 years to plan for the implementation of ISO 20022. And SWIFT has just said, well, actually the market has said, SWIFT hasn't said, the market has said, we're still not ready for it after almost 20 years, which is ridiculous. It's like SEPA took 10 years to implement in Europe, and it takes 20 years to implement a standard in the world through SWIFT. It's to me, it's just indicative of what I just said about Bankenstein, which is, you stitch a load of old parts together, then you keep them alive through jolts of electricity. You need to refresh them, and you guys, digital transformation is where it's at.
And And the scores are in. Chris, you get extra points for the fashion and for the response. I'm giving you 14 points. Andrew, you slam dunked that last point there. So I'm going with 12.
I do have to concede Chris's t-shirt. Being a t-shirt fanatic, I absolutely love that. I think we should turn that into merch for the show. You know that.
I mean, it's a visual show. So.
Absolutely fantastic. That for those of you who are listening audio only, Chris has the most amazingly psychedelic Bankenstein print on his. I think we might have to put a picture.
I think the t-shirt looks great on Spotify.
Help us all.
This is part of my Halloween outfit. I won't do the rest. I've actually got the mask, but I'll do that later.
I thought you were already wearing the mask, Chris.
There you go. Thanks.
All right. This week, someone predicted the death of something through the convergence of technologies such as DeFi, stablecoins, crypto, and CBDCs, which are poised to effectively disrupt the payments and banking industries. And it's not cash, and unfortunately, it's not poverty. Who is slowly dying, according to this thought leader who wrote that piece?
You buzzed, Chris.
Oh, I'm on mute.
No, you're not.
Oh, you're not?
That's -1, Chris.
I'd say it's
Wrong button.
It
10.
said I was on mute on Zoom anyway.
That was a wrong button.
Everything's dying. You know, the economy, the country, the world, the recession. You know, it's all doom and gloom. So let's all just go and jump off a cliff.
Please tell me that it's the metaverse that's dying before it's been bought. Please. You were talking about the convergence.
No. I'm living in a metaverse because that's alive. In real life, I'm dead. In the metaverse, I'm really enjoying myself. You know, so like, sort of get out of the real world, guys. Let's go and live another life.
The metaverse is 18 again.
Have you ever heard of a second life?
Well,
I think a second life is a great idea.
Yeah, we had the metaverse. It didn't work. It was called Second Life, and now everybody's trying to reboot it. And all that you ever see about the damn metaverse is games. I was an avid gamer, and if I had the time, I'd probably still play games. But the metaverse, come on, you know.
I don't know if you saw, but Facebook, now Meta, has lost billions, and Mark Zuckerberg has lost billions betting on the metaverse. And it will eventually come true, because for me, it's like Star Trek: The Next Generation. When you go into the holodeck, you live in another world for a few minutes, and it's very enjoyable. But to make that a reality, it's proving a multi-billion-dollar bet by Facebook that's lost multi-billion dollars. And Second Life tried it and failed. Facebook's trying it and failing. Someday it will succeed. But this is nothing to do with your story, is it, Rik?
No, and I'd like to give it some time because, Mary, in all honesty, it is quite a controversial position, and I'm curious to hear what they're going to say about that. What this writer said, unlike the fact that he's talking about convergence of technologies, he believes that fintech is slowly dying, which is, according to me, all about tech and all about DeFi and stablecoins, etc., etc. So, Andrew and Chris, yes.
So I have no idea what position my esteemed colleague would take, but I find it rather curious when they're saying fintech is dying, because to me, fintech has been, for almost since its inception, the outsourced innovation of banks. It's the stuff that the banks were too risk averse to do because they didn't want the potential brand and reputational damage, and also because banks have really struggled to figure out how to properly incentivize their employees to actually be entrepreneurial. So what happens is that their best and most entrepreneurial employees leave the bank, solve a problem filling a gap, and then they sell that back to banks again, and then it becomes so. Fintech, I don't think fintech is going to be dying anytime soon, because we've still got lots of problems to solve, and the banks are completely unable to address the cultural, the compensation, there's so many different needs to be able to do that themselves.
So fintechs are slowly dying, but fintech isn't. Chris.
No, I think that there's multi-layers here. I mean, Andrew's right about some of the aspects of fintech solving the things that bank can't solve themselves. So it's outsourcing the solutions to what banks cannot do themselves. But equally, there's a whole area of fintechs creating brand new structures, from peer-to-peer lending to what we see in peer-to-peer payments in African nations and South American nations. And Nubank is a great example of what I see as an innovative new bank structure, which is why calling themselves Nubank is pretty good. And if you don't know them, started in Brazil, valued at $95 billion and growing rapidly. Fintech is not dying. I mean, what's happening is the run rate and the investments in fintech has dried up, and those that don't have the cash runway to get through the next 18 months will be acquired or will fail, more likely be acquired, and maybe be acquired by banks. And that's not a failure. That's not fintech dying. It's just a natural market cycle. And a little bit like 20 years ago, people said when the internet bust that it was all going to go and hit the wall, but now we have Amazon and Apple and others proving that wrong. And exactly the same will happen with fintech. That yes, there will be a bloodbath. I've blogged about this quite a lot recently. But coming out of that will be some amazingly successful, not unicorns, but triplecorns, trillionaire companies that will all say, why didn't I invest in that?
Mary.
+1 to both of these comments. I think we're in for another sort of renaissance eventually, because doom and gloom 2007 really led its way to exciting things. So Chris, I'm giving you 23 minus the point for the for the mute or not mute. Andrew, you get 25.
Yes.
Because I felt it.
We have one more round, 2 more questions for this first episode. This is the WTF round. First question. We all know that brainstorms, the best brainstorms are the ones with pizza. To better serve its fintech community, Domino made a surprising move in the UK. What would that be?
As I've got the right accent, being British, but not living in Britain for obvious reasons, let's not go down that rabbit hole. Basically, it's that banks, like they used to turn into cafes for the branch services so they could serve coffee with baristas, are now offering Domino's pizza.
Is that all banks? Oh, that's I thought that you were going to say the best thing that they did.
If a bank offered me pizza in a branch, I would go there because, like, I really like a pepperoni. That's my favorite, double pepperoni actually. Yeah.
Well, I thought that the breaking news was going to be that the debate had finally been settled that pineapple belongs on pizza. I mean,
you never have pineapple on a pizza.
Ham and pineapple.
Who are you?
This is the WTF round. It's ham and pineapple. Oh man,
I love pizza Hawaii.
There we go.
Oh, I'm a fan
pepperoni,
too.
guys.
Oh, there we go. It's 3 against 1.
Always pepperoni.
Dude. Yeah, so a lot of the banks, I know that when we've been to events and that, a lot of the banks have got the best coffees on the stands, and I've often said, the banks, but certainly banks in my high street would definitely better serve me if they just all became coffee shops, actually. So offering pizza as an extension to the coffee shop.
Yep.
Yeah,
maybe a bit of spaghetti bolognese. A bit of other stuff. A steak and chips would be good.
So basically, just don't be a bank. What
All
was
right.
the actual story?
My email is
Actual story.
completebanker@gmail.com, so I am a complete banker.
The actual story was
Oh,
getting
this is a
close
real
to what
story?
you were saying, but it wasn't exactly that. And actually, it's yet again another branch closure, this time by Lloyds Bank in, and correct me if I'm wrong, Edinburgh Exchange Street. They closed their branch, and that has been taken over by Domino's. So it's becoming a proper pizza place, no longer a bank, but a former bank, which I thought was pretty interesting if you want to serve, if there are any, fintechs as some source of inspiration.
I think the key thing about this story is like all banks are closing physicality over time.
Yep.
And when you look at the numbers, and we could go through them, but I said 25 years ago that banks would need about a quarter or 10% of their physical distribution structure because of digitalization. And that's becoming a reality. And we've definitely seen that in Britain, in the bank branches. In fact, what's interesting is now they're opening what's called banking hubs, which is you can walk into a center because you no longer have a branch, but the center represents the banks of Britain. So you can transact with them physically in one physical place with all of the banks. And that's been a clear trend in the last 25 years. And the reality is that in most countries, not in developing countries, to be honest, because they're still launching branches, but in the economies of Europe and America specifically, most banks will get rid of 80% of their branches that they had 20 years ago.
But it is a bit of a concern, Chris, because when you look at digital exclusion figures across the world, these days, if you're digitally excluded, you're automatically becoming financially excluded, because as the physical presence of banks disappears and the reliance on digital includes, and I'm a massive techie, don't get me wrong, and I've been pushing digital, but it's digital and as opposed to digital only, because until we solve digital inclusion, we can't solve financial inclusion if everything is digital. I mean, the UN's estimate that approximately 37% of the world globally is digitally excluded. And even in developed countries, no, the UK quotes a very small 8% of its population as digitally excluded. However, other reports say 22% of adult population lack the skills, even though they may have internet access, to actually live, do everyday tasks online. So reports of bank closures and the rate at which they're closing do actually give some cause for concern and some pause for thought.
Mary, I have the impression that...
Sorry, Andrew, are you trying to statistically sort of diss me? Because that's a lot of numbers. And Mary, we need your view on this, because you'll know all about it.
Yeah, because these guys, they seem to have a lack of jokes today, and they want to compensate that with very serious insights. But do they achieve the extra points by doing so?
This is the really good question. Definitely didn't win the humor round, but I mean, did get me hungry. Do you want pizza? Do you think that's a great next act for a big branch? And to Andrew's point, I'm sort of really into this topic because in the US, like some of the neobanks over the pandemic started letting customers deposit cash at like Walgreens, for example. So it just shows that even for the newest guard, it's still like there's this tension here. So my points, slightly giving one more to Andrew at 8 and Chris to 7. And I think Andrew is leading. I'll have to do my math.
You'll have to try and snatch it back.
One more question, guys. One more question. We all know that it's every fintech and bank's wet dream to build a super app. In that context, for example, this week, Revolut shared that they will launch a chat feature to make payments with other clients. Also, PayPal thought they were a super app this week, but forgot that Musk plans to build it with Twitter instead. What happened?
You've got a buzz, Andrew, and I buzzed. So I'm going first, which is, Elon Musk is an amazing guy, and I've seen him speak a couple of times alongside me because I'm a famous guy.
Of course, he's an amazing guy.
You're the
He's
wise
South
guy.
African.
Yeah.
He's South
I
African.
won't say he's a friend, but I can wave at him from far away. And like he's a bit of a weirdo. He's definitely fairly Asperger's, but most people who run big companies are, like Branson, for example, who I've also seen from far away and waved at. And the core thing about Musk is, yes, he did X, which became PayPal, and now he's talking about X again with Twitter. And what I find intriguing is that he wants to make Twitter a payments platform. He's going to charge $8 a month to have your blue flag, which I kind of think is a waste of space. But in terms of the payments idea within Twitter, it's intriguing because it could very well be integrated with Dogecoin, which is the thing that he's been pumping for a while, which I call dodgy coin because I don't believe in it. It's a joke. And at the end of the day, I kind of go, well, where is he going to end up? And is this going to become a super app? And the super app is the Alibaba Alipay app in China, for example, where you have commercial sales like Amazon, social networking like Facebook, and payments and financial like PayPal, all in the same app. And I just don't see that happening in Europe and America. I don't think the governments will allow it. I think that it will seriously frighten them. And so I actually find what Musk is trying to achieve with Twitter quite frightening in terms of I don't think the governments will allow that super app.
Judge Mary, I have the impression that Chris didn't really answer my question.
You know what? That's why I've got this swatter. A family heirloom. It says buzz off. Make him go again. Or Andrew, come in for the victory lap. We won't even need to count.
It was actually about PayPal and to hear what happened at PayPal in pretending to be a super app.
Well, yeah. I don't know about pretending to be a super app, but they made a massive mistake, according to them, by sending out updated terms and conditions and telling people that they are going to be fined $2,500 for spreading misinformation, amongst other things. And that money will just be automatically taken out your PayPal account. And then there was a huge backlash on Twitter, and then PayPal went, oops, sorry, we never meant to send that out. Well, who wrote it and how did it get in there? Were there gremlins in there or whatever? But again, it's one of those things where it's like people were blowing up saying, what right has a company got to say what you can and can't spend your money on? Which to me raises there's so many tangential questions about that, because as you know, a lot of our talks recently have been around CBDCs, and potentially, if you see what happened there with PayPal, governments could do the same thing, and they could say, you can't spend your money on X, Y, or Z, and we're not going to let you, and we're just going to freeze your account, block your account. PayPal, I think, overstepped the line and realized it, but it does raise ethical questions over where should their line be drawn? What should they and shouldn't they be allowed to do or allow people to do with their money?
Well, there is this thing around PayPal starting to become a cancel culture policy and saying that if you are dealing in things that are not appropriate, then you shouldn't be allowed to use PayPal. Such as
they deem not appropriate.
They deem not appropriate. And should they really be their own government? People are saying no.
Gee, Mary, So what
Okay.
we see here is
I think I still need
one
10 points.
guy that
Yeah,
gave
Mary,
a
I
wrong
need 10
answer,
points.
another guy that gave a serious answer. How is this going to influence the end result?
I will tell you, as a journalist, I got to go with Andrew on this one. What's at stake is like censorships and imposing wills on people in like very dangerous ways. So, I'm going to give Andrew 13 and Chris an elegant 11, which makes Andrew our first winner.
Well, guys,
I
the
hope
end-
this is not. I hope
I
this
gave it
doesn't
to you with
end
a
up
mouth.
being the last episode, because I thought that we agreed from the beginning that the wise guy would always win.
no chance of that. He has to fight for it.
All right. Thank you. Thank you for your wisdom. Thank you for being different, and thank you for judging. Thank you everyone also for listening. I cannot wait for more international fintech news coming up soon. Don't forget to subscribe to whatever channel you're on right now. This was the first episode of Fintech Uncut. We hope to entertain you, your colleagues, your friends, your neighbors, your connections, your cats and dogs very soon again with more news, more controversial topics, more jokes, and more fun. Bye-bye.